Hi, this is LD at Wave Sage. I want to go ahead and do a market update. This isn't financial advice, always do what's best for you. So the market keeps squeezing higher, and what's happening, just the mechanics of the market is a lot of bears just um, don't have conviction in the strong hands, and so what happens is every dip becomes a buying opportunity for the YOLO, the gambler type, which is typically heavy when you're toward the end of an advance on a wave, on a final wave, which is what this is. So speculation reigns, extreme euphoria, extreme complacency, extreme. That's what we're seeing, but that can continue as what happens is we start to pull back. The bears go like all in, but then they squeeze themselves out, and this will just continue for a long time until the bears finally give up. Where when we pull back, they're like, it's a sucker's drop. It's just going to bounce back, but then it doesn't, and it's going to come back. I'm not going to chase it, and then we'll be down here and go, hey, yeah, maybe this is the real thing after all. So that's how this will more than likely develop. Now, of course, there's always the black swan risk, within it, China invasion, and I don't think any dip buyer will be able to stop the dramatic fall that would come after that. So we don't know. I do know that the rally is due for a massive pullback, and at any moment, but it does continue to squeeze higher until the big money decides the advance is over. Okay, so the VIX, as you can see on the 45 minute, you got a lot of bullish divergence here. I think on the 4 hour as well. Yep. And then on the daily, not on the daily yet. Yes, you do. You've got a lower. Let me see here. No, not yet. So daily, not yet. 45, yes. 4 hour, yes. 15 minute. It looks not there. Yeah, yes. So 15 minute, yes. So the VIX, when I look at it, could still bounce, and then come back for another low to make that daily divergence and then out. But this VIX is ready to have a counter trend rally. I mean, we're at a support area that the VIX is normally found, a low. This was February's, VIX here. Maybe we can go down a little bit more on Friday. If we break the 17, we would drop to 14, and then we would start to be entering record territory for the VIX in terms of starting to get into really low levels. The dollar index is really also helping the market with this breakdown here. I believe this is an A and a B, and we need a C to finish this move. I Now, depending on the intensity of the drop, it could also finish the entire cycle for new highs, or it could bounce and fail again, and this more than likely will support the market. So the question is, eventually we're going to have a correction here, or we could have the bottom in the dollar, but it looks like we should go lower in the dollar. Thinking, and if that's the case, then the market should be supported. Now, we did break this low today. I mean, theoretically, could I just change some lines around and give me the count I want? Sure, I could do that and call it finished, as long as divergence is erased. And we do have the 4 hour erased, and the daily is not erased. So even in that, situation, so we know the dollar still has more downside coming. We want to see that daily divergence erased here in the dollar. Once that happens, then the entire move down could be over. That would be pretty bearish. So this also could tell you maybe the market still can grind higher with support of the dollar weakening, but it won't be in a straight line. So if we're in the C wave, we should be pulling back soon in a wave 2 at some point, and so that would be a market pullback more than likely of some kind, and then like that. So if you're trading the market, be careful. Now we could also still be in the B wave of the dollar here, and that would be a much bigger correction, or we can even do something like that. Now that would be a massive correction, but then followed by another pump higher. That's how I'm thinking the dollar will play out. But we have seen recently the correlations not be as strong, so it's not a guarantee a weak dollar will be a green stock market either. So I'm not using it for a trade-in signal at the moment, unless I was trading the gold and silver and commodity side, which is continuing to advance. I mean, if you look at the commodities today, I mean, they were doing pretty well, and that's inflation increasing. So this is going to make the Fed's job harder, May's report harder. So Bitcoin is still advancing in this sell area, and I believe it'll continue higher until we get the short-term divergences, which we're already starting to see here. So this could be the fifth wave of the final move we're in right now here. Gold and silver are the same thing. Gold here, it took out this divergence, so it's a 3. I think it's just finishing this 5 up. And then when this finishes, I believe the dollars be finished on the downside. In silver, you have divergence, so this is a wave 5 that should be coming to an end at any moment. It's starting to run out of gas unless you get some serious follow through tomorrow, and we can erase those divergences. But as long as they hold, this is a wave 5, and we should retrace this. Oil finishing up its fifth wave advance. It should be done, or this is just one of 5. Tough to say yet here. Now the stock market itself. So again, as long as you're below the February peak here, it's still in the bearish count. It could be an A, B, C, and a 1, 2, 3, 4, 5, and a 1, 2, 3, 4, 5, and the divergences allow that to happen. 3. 5 here. The 4-hour, you have divergence between that 3 and 5 here. So these moves are showing you the advance is coming to an end. This entire cycle has to correct. This will correct, just like this leg corrected. So it's going to correct. It's going to correct. I know it doesn't seem like it's possible, but it's going to. The technology actually didn't even break this high. I believe it's in ABC and this too. Maybe it can go just a little bit higher, but I think that should be it soon for that move. And again, you're just not seeing the momentum really push where you want it, but we didn't take that high out. That's bearish. IWM, same thing, 1, 2, 1, 2. Still didn't take that high out, despite all the euphoria today. Now the Dow Jones, I'm looking at it now from this angle, where you have a WXY, and this is your W, and now you're in an X, and then you get Y down here. And this X, this is a WX and an ABC and a 1, 2, and it looks like we're in 3 of this final leg higher in the Dow. I think it should be coming to an end at any moment for 4. And maybe one more high for 5, and then I think that should do it for the Dow sequence. And again, divergence, but it is a 3, so we should get a pullback and another high in the Dow. If we don't get that, then this is something else. It's not a WXY. So then that's how the market. Now the future sometimes gives us clues. Again, the Dow, I'm not really trading that. It's just as long as it's under the December peak, it's bearish overall. Here, the SPY is back in this area where it dumped before. It didn't break this high today. It got pushed back, and now it's getting pushed back again. It'll be interesting to see what happens tomorrow. Do we take out this peak and push up pretty strong on the bank earnings, or do we drop and start this move down? Again, the Nasdaq never finished. It's still a 1, 2, 1, 2 here, and now it looks like it's struggling again. Despite all the euphoria, the amount of euphoria today, you would have thought the Nasdaq was up here, but actually it's still a lower low, a lower high, a lower high, a lower high, lower high, lower high. And we'll need to see the futures. Now, if, like I said, tomorrow's trading is key because it can negate this setup here. And then the Russell's the same thing, 1, 2, 1, 2. So you just got to do what's best for you, but I do think there's a lot of risk in the market on the long side. Um, we can look at the stochastics. The 45 minutes been reset. Okay, the 4-hour is turning up, so that's interesting. The 15-minute is reset. So we're due for a pullback, but we do have the 4-hour turning up. So that's something to keep in mind, that maybe we do get a drop, but then another move higher. So perhaps we get 1, 2, 3, and then the 4-hour cycle can reset, and then we get a bigger decline later. Let's take a look at the daily. The daily is still pushing down. That's why it's keeping this technology from breaking the high. I said the daily is putting pressure, selling pressure on the technology sector. It's really preventing it from really accelerating out of here, and that's bearish. And then let's take a look at some of the other indices. So SPY, 45-minute should be resetting, 15-minute resetting any moment. The 4-hour, it's in this middle area. It could still pull down, so you can't really read much from that. And then here the daily has reset higher. It's ready for a drop. It's nowhere near where the NASDAQ is, so this still hasn't even begun to move down. So this still has to reset its stochastics. In the Dow, the same thing. Let's look at the much higher degree time frame. Well, the weekly wide open. This is probably why we're getting this buy the dip. But once this weekly finishes, then you're going to go into a multi-month bear market decline. But of course, it will be choppy. Now on the NASDAQ, you're already there. So the weekly cycle has ended. It's stochastics reset on the NASDAQ. So you really have to be careful in the NASDAQ. IWM is actually crossing over bullish. So that's something to keep an eye on. So perhaps the downside is limited before a much bigger bounce. So we could pull down into this area. Maybe it's shallow, and then with the Russell get a much bigger bounce opportunity. So let's keep an eye on that. That may be something like that we see later. So that's, when I look at the market, that's what I see. I mean, let's just go look at some technology stocks real quick. Tesla, WXY, AB should be pulling back in C into this area. If we were in this area, I would be more bullish for the market. Until we get there, I can't be. Apple, still in a B wave connector. That should end soon. And then we should get a pullback. At least back down to 158 in this area, or if we go down and it was a 1-2, so we'll have to wait and see. But I do believe Apple also needs to swing lower. Just kind of click through some of these. AMD is struggling despite the euphoria. Amazon here looks like to me some type of WXY move, in this, so it should swing down one more time at least. Nvidia, again, was red today. It's not following the rest of the market. Microsoft, this could be 3 waves, so this could make one more minor high up here to 295s, 96, and then start. I don't see this as 5 waves, so it looks like this will break the high. Meta is still in this wave 5, and with divergence. So for me, this is probably like a 1-2, 1-2, or it could be. Let's look here. You see how there's a peak here, so it's probably some type of yeah, no, I have to probably label it like this. 1, 2, something like in 1, 2, 1, 2. Yeah, I think Meta looks like it's gonna extend more. It just seems that way. Again, this whole area is the sell area, so it's just, but eventually it will run out of gas, guys. It always does. Then uh, I think that's it there. And then let's see. Let's look at commodities and XLE. Again, 1, 2, 3. Looks like this is 5 up. So this this could be tricky. That looks like 5 down here. So some kind of A, B, and then yeah, it looks like C. So to me, this looks like you've got 3 waves here. So you probably have to call this like 3 waves down and then 5 up. And then you have 3 here. So 3 and a 5. So to me, this is on. I wouldn't label it the way I have it now anymore. I'd probably label it something like this, where it's a 1, 2, and this is something like a 1, 2, um, 3, 4, 5 here, and you have to do that, and you're coming out. You pull back. So energy looks like it's pretty bullish, which makes sense. But if energy is going to run hot, that usually coincides with technology pulling back, right? That's what the trade's been. So if oil can really get launched out of here, let's say it extends out and can push out, erase divergence, then oil will go, the next level would be $100. And then I think you're going to start to get that panic because energy's too high. Inflation, trade will follow suit. So that's it. So that's all I'm going to say on the market. They always say like at the very top, it's maximum financial risk, and then at the bottom, maximum financial opportunity. Right now, this is extreme financial risk. Every day that it pushes higher, you're just pressing your bet at the casino, but eventually the house will take your money. So you have to know when to ring the register, even if you'll miss some upside. And I believe if you don't do that, the market, like I said, when the time comes, more than likely it's going to open much lower than anywhere your stops may be sitting overnight. So I have a funny feeling that's how the market is gonna start the downturn and end the B wave. But until the right news comes out that they can use to really create a lot of fear, I believe we'll get this like back and forth, where we just keep grinding higher as people just keep getting squeezed and squeezed because it's like we drop and then everyone's like, oh, max puts, max leverage shorts, and then they squeeze themselves out and they do it again and again and again. It's like the same people buying Boyle every day. Boyle until they give that up, it won't drop because the market will squeeze higher. So eventually the bears have to capitulate, and when they do, then watch out below because the downside is going to be enormous. All right, guys, that's all I've got.